Yes, my name's Dan Jones, and I'm the Assistant Director of the DLGF. I work mostly with budgets, some a little bit with assessments, but I deal a lot with TIF and a variety of other things as you do with budgets, which is practically everything. But I'm standing in for Susan Clark, who is not with us today because she had a doctor's appointment. So I'm going to do my best to walk through this. We should have plenty of time. So if you have questions, if there are a couple of things you want to address, or just happen to think about if it has anything to do with budgets or municipal finance, I'll try to direct or address it if I can. Today, what we're going to talk about is where we are with the 2015 budget, where we're going with 2016, and how the timelines are. I'm going to spend some time about online notices. There are some new features about that this year. This is about the public notice of your budget, so we'll talk about it. And also the county review. Some of you may know, but a county council has to review any budget of any unit in your county where they're proposing to have a tax levy in the following year. So we'll talk about that, some of those requirements. And I'm going to touch on some legislation this year. There might be a few things in there that you're not aware of. But why don't we go ahead and get started? 2015. It was a good year. We had all 92 counties with on-time tax bills this year. That's the first time. I've been with the DLGF for 10 years, and it was the first time in those 10 years. So I know it was several years before that, before we had on-time billing for all counties. When I first came, there was a county in the south that was delayed. As we went through this reassessment back in 2004, 2006, I think it was, every county was behind. And in some cases, some counties were behind years in getting their property tax bills out. So we finally got everybody caught up, and everyone had their property tax settlement on time this year. So that's a big improvement. Now let's move on to 2016. Just to bring you up to date right now, the next big event that's going to happen is your county auditors are going to certify net assessed values to all the units in the county, and they're going to certify that also to the DLGF. One of the things they have to do before they can come up with those assessed values is what we call a TIF neutralization. And we're right on schedule with getting those processed now, and now have 9 counties that have submitted, and they've been approved. That's through today. So we're right on schedule there. Then on August 3rd, that's when those certified net assessed values are scheduled to be done by the county auditors. To be honest, the August 3rd is not that realistic for a county auditor. If you've ever worked at an auditor's office, that's a very, very big job. Certifying the net AVs is a lot of work. It's very technical. There's a lot of things that go into it. So they usually get those done by the middle of August, maybe the 1st of September. By then, all counties should have it by then. But anyway, statutorily, they're to have it by August 3rd. When the county submits those CNAVs, or the certified net assessed values, that's the order that the county's budget is going to get worked by us. The county that submits their CNAVs first is going to get that budget worked first. Now that's assuming that all units in the county have adopted their budget and submitted it and everything's worked. So, but that's the sequence that we go through. Another big date that's coming up is September 1st. And that's going to be the deadline for all taxing units to submit the information to the county council for that non-binding recommendation. I mentioned a few seconds ago, all units have to submit a budget to the county council for a recommendation. That's if they're going to have a property tax levy. And what they submit is information. It's their budget, their proposed tax rates, and their proposed tax levies. The county council has to make a recommendation as to whether they should take some kind of action on it, and then it goes back to the unit. That's just a real quick overview of that process. It's a relatively new thing, maybe 4 years, maybe 5 years that we've been doing this. General Assembly makes some tweaks each year, but the idea behind it is so that there's at least one body in a county that looks at everything, where they know what taxes, or they're going to have a reasonable idea what taxes and tax rates are going to do within that county. And being the county council just seemed logical. That's the group that should see everything because it's the only one that oversees the entire county. Those submissions of those budgets for their recommendation is done through Gateway. This is the first time that those recommendations have going through. We've automated most of the process so that most of the calculations that they have to do their comparisons to are done for them. The unit just needs to drop in their proposed budget and proposed levies. It is the taxing unit's responsibility to submit that information to the county council. And now we're doing that through Gateway. So as soon as they submit it in Gateway, it's automatically forwarded to the county auditors. Now, September 14th is the deadline for the units to post their budget in Gateway. Now, Gateway is our online portal, and it's to be used by all units for preparing their budget and submitting their proposed property tax levies. But it's also a tool that's for the public. If they want to see the budget, this is the best place to go look. That budget has to be submitted through Gateway at least 10 days before the public hearing. That's so the public has an opportunity to review it before the public meeting. For units that have a binding recommendation, I call it adoption, but in the statute it's called binding recommendation. They also have to submit that information to the county in that same manner. Now, another big date is October 1st. That's the last day for that county fiscal body to actually review those budgets and issue those recommendations. And they're going to make the recommendation on the budget, the levies, and the tax rates. The last possible date that your fiscal body, your county council, I would assume since this is a county organization, the last possible date that they can have their public hearing on the budget is October 23rd. And the way we get to the October 23rd is it's 10 days before the last possible day to adopt. Now, we strongly recommend that units do this long before there, because if you get to one of these meetings, if you don't have a quorum, if it's the last day, you're out of luck. There's no possible way you can fix it. So we recommend it at least 10 days. Some units are adopting their budgets in September. Some are in October, most are early October, but we don't recommend you wait until these last possible dates. Another point on those dates, the last possible date to adopt the budget is November 2nd. Now, another reason not to wait until November 2nd for your fiscal body to adopt is November 3rd is an election day, and most of your counselors are elected. So they're probably going to be busy on that election day, and I don't think they're going to want to be up adopting a budget the night before. So I would strongly recommend that they accelerate those dates so that it's earlier than November 2nd. After the budgets are adopted, probably your county auditor, they have 2 days from the adoption to submit that information to the DLGF. Now, why don't we focus on our online notices? There are a couple of changes to that this year. By the way, if you want to see a copy of your budget, it's going to be in our Gateway. You can go through there through a public access, go search for your county, and you can find your department. These budgets for a county are going to be departmentalized, and you can see the budget that has been adopted or that's been presented, and finally as it's adopted. So it's going to be online as well. So let's talk about these for a few minutes. This is an opportunity for your taxpayers to access what we call the Form 3. Now, that Form 3 is the actual budget that's showing the budget by fund. It's going to have the date, the time, and the place of your county council public hearing, and it's also going to have the date and the time and the place of the adoption meeting. And that's so that the taxpayers can see this and they can find it. One thing that's new this year is it's not going to be advertised in a newspaper. It's only required to be online. So this is going to be the source of the information for both the taxing units and for the taxpayers. Now, each county, and this would be the county auditor, is responsible for publishing a notice in 2 newspapers informing the public or the taxpayers where to go to on the website to find the information for that budget. And that's how they would get access to that Form 3, is that part will be advertised by the county auditor, and it's going to be our website address. Something that's new this year on our Gateway application is you can actually subscribe to budget notices. And I'll show you in a second a couple of screenshots, but anyone that wants to know when these budget hearings are going to be, they can subscribe to our Gateway system, and they can receive an electronic alert about when that meeting is going to be scheduled and where it's going to be held. What you do is from the budget notices page, you click Alert Me for the unit that they're interested in, and then you can enter your email address, and that's how you'll be notified.
What is that website?
This is the online notice part right here, and over here is where you would see the Alert Me. You would click in here for whichever unit you're interested in. You could click more than one, and then you would enter your email address up here. And then once that information is entered, when that Form 3 is finally submitted in Gateway, it'll be reading this, and it'll notify you of when that budget meeting is and where it's going to be. And again, you could enter more than one unit. And this is how you would get to that page. This is from our main page. This is our Gateway applications here. And here's the online budget notices. Just go into there, and it'll take you back to that other screen. And then there's the web address on how you find our homepage. If you haven't been to our homepage, we have a ton of information out there. You might want to just go there and look through some of the information about budgets, rates. We've got all kinds of reports and datas. There are memos. There's a reports and datas application. If you're looking for maybe some assessed value trends, you might click on that and take a look around. Tables of tax rates. Just mountains of information. Now let's talk about that county review. Does anyone have any questions at this point?
Do you want us to ask questions as we go, or do you want to wait to the end?
Your choice.
I didn't want to interrupt anything, but if we don't get our budgets, if the auditor and council don't get the budgets turned in a timely fashion to the state, does it revert to last year's budget?
Sort of. If you don't submit your budget, or if you don't adopt your budget on time, and you miss those deadlines, and I think that might be in this presentation a little bit earlier, but what it does is you're going to get the lesser of what you've had in the previous year, your previous year's appropriations and levy, or you're going to get the lesser of what was advertised for this year. So it would be the lesser of the two.
Thank you.
You're welcome. So let's talk about those non-binding recommendations for a few minutes. This is the information that's required to be provided by any taxing unit that's going to propose a property tax levy in the following year, which is most units. Now there's some, let's say if you're a utility, you may not have a property tax levy. Like that's primarily a city. Cities have a water department, they may have a sewer department and so forth. Those are fee driven. They don't necessarily have a property tax levy. But anyway, some of the information that's required to be submitted for that review is your proposed budget, your proposed property tax levy, and your proposed property tax rate, and that's for the non-school units. Now for schools, they have to submit that information, but the county council does not issue a review. So the county council is required to make comparisons of all the property tax levies in the county, but they're not required to make a recommendation for schools. I don't know how that evolved, but now this one, For the taxing units, it's any taxing unit other than the county, and the reason that's inserted there, the county council does not need to issue a recommendation for the county because they're going to be adopting the county's budget. And they're going to be hearing all those departmental budgets, so they don't need to do a recommendation to themselves, in effect. But anyway, there are some units that are not subject to the binding adoption. So all those other units are the ones that have an elected board. Let's say your townships, they have an elected board. They would be receiving a non-binding recommendation from the county council. There are units, for example, libraries, they have an appointed board. If their budget, libraries are different, but if a library's budget is proposed to increase more than an average growth quotient, which is a statewide average increase, if the library's budget is going to increase more than that growth quotient, they have to get their budget adopted by the county council. Or actually it's either by a county council or a city council or a town council, whichever applies. That average growth quotient, by the way, that's a 6-year average of the non-farm personal income and what those changes have been over the years. For 2016, it's going to be 2.7%. But the big difference or the big distinction on these recommendations is whether it's an elected board or an appointed board. Now, the county's responsibilities for those units other than schools is to review the budgets, the levies, and the rates for the taxing unit. They have to issue that recommendation regarding those proposed budgets, levies, and rates, and they have to include a comparison to that Indiana average growth quotient and the county's average growth quotient. So there's a calculation that we do for each of those. We do the statewide average, and we do an average for each county. So there's a difference in there. It must include the comparison to increases in the budgets and the levies to all the other units within the county also. We prepare the format of that report in our gateway system so that most of that's done for them. What they have to do is review it, make a recommendation, sign it, and then submit it. In the past, they would just get an Excel spreadsheet. They would have to enter all that information, enter the recommendation, and then sign it, and then have it submitted somewhere. Now it's done mostly automatically. Now, the county's responsibility for schools, as I mentioned, they're to review the budget and the levies and the rates for the school, but they do not make a recommendation. And in a year or so, maybe they will be required, but I'm not sure exactly what it would involve because school boards are rather independent, and you probably know that.
Can
Yes,
you
sir.
define review? I go to the county council meetings and I listen, I question, what's the definition of review?
Review in this case is they're going to recommend you lower the property tax rate or lower the property tax levy. They could recommend increasing it, but they're not going to have any authority. Actually, they don't have any authority, but they can't increase if it's already been advertised or posted on Gateway because that creates a ceiling. You can only go down from there.
But at the meetings I've attended, their attitude was the state handles that. If a school board or a township wants to increase substantially the tax rate, my county council says, well, the state will handle that. We don't even need to address it.
What the state does, what the DLGF does, is we enforce maximum levy controls. We take whatever last year's maximum levy was for your unit, we'll increase it by that growth quotient, and then there's a handful of other exceptions that are applied in a couple of things in a formula that are applied, and we come up with a new maximum levy. We will keep the combination of all your funds levies, with the exception of debt, maybe a cumulative fund, within that maximum levy. That's our charge.
So when the council reviews that proposed levy, if they make a recommendation, there's none required, but if they would make a recommendation, would it be to that school board, would it be to the township advisory board, or is it to the state?
It would be to the local board or council. So your county would make a recommendation to, let's say, your township boards or to a town council as to what they would prefer to see the budget do.
That would include probably fire territories too, probably?
Yes, it could.
Thank you.
couple of other notes about the non-binding recommendations. If the unit, and that could be a city, a town, or a township, if they fail to submit that information by that September 1st deadline, that budget and levy is going to be frozen for that unit, or it's going to be the lesser of what they've adopted this year or what they had in the previous year. It's going to be the lesser of those two. If the county council fails to make that recommendation, the county's budget and levies are going to be frozen for the following year. So it's a kind of a double-edged sword there. The General Assembly wants this to get done. They want those recommendations to be done. And again, this is going back to that 2006 budget cycle when there was, in effect, a property tax revolt in the state. That's when this was born, is they want somebody at the county level looking at this stuff. There used to be a tax adjustment board in each county where they actually had the authority to cut the budgets or the levies or both. They could reduce them. Yes, sir.
When you had the mandated meeting for the councils down there at Indiana Downs, how was the turnout at that meeting? Was that part of the local government finance at that state mandated?
We were one of the speakers there.
Was there
Yeah.
a good turnout from the council?
Oh, yeah.
Yeah.
Thanks.
Yeah, we normally get pretty good turnout, and it's usually in central Indiana someplace. October 1st is the deadline for the county council to make their recommendation and to return it to the units. What we do when we come in and we start reviewing the budgets, we just check to make sure that there was a recommendation issued and that it was on time. One thing, it's not on the slide, there is no format, no recommended format for that recommendation. So the county council has some liberty as to how they want to do that. We're just going to verify that it was done, that there was a recommendation. Now let's talk about binding adoptions. I touched on this before when I mentioned libraries. If the library's budget's going to increase over a certain threshold, it goes to what's called in the statute binding adoption. Well, it's pretty redundant. A binding adoption. Adoption is rather binding. You know, that's what it's going to be. But the units subject to a binding adoption are those units with appointed boards or a majority of the board is unelected. And again, libraries all have appointed boards. And if their growth of their budget, not their levy, but their budget, if it's going to exceed that average growth quotient, it has to go to the county council for adoption rather than to the board. And we're going to look to make sure that the county council adopted that or a town council adopted it. We're going to disregard anything that the library board did, because at that point, their fiscal responsibilities have passed on to another body, and they're no longer in charge of that budget. Again, I believe we mentioned this before, but the proposed budget, levy, and rates, they must be submitted to that appropriate fiscal body by September 1st. By an appropriate fiscal body, back to the example of a library, the library may be originally established by a city or a town, but now their boundaries are beyond that town limits. Let's say they've taken on more, they're servicing an entire township at this point, just as an example. Well, now that town council would have been the appropriate fiscal body if that library had not expanded, because it originally created it, and that was the original boundaries. But now, since that library, in this example, is larger, they're going to go to the county council. So the county council is going to be the one that actually adopts it. That's what we mean by appropriate fiscal body. And again, that's statutory language. It was written right into the code. One thing about the responsibilities, once that happens, if it has to go to an appropriate fiscal body, that appropriate fiscal body now has the responsibility to submit that budget. It's no longer the unit's responsibility. It's onto that council. That unit also has to be the body that does the public hearing and does the actual adoption. As I just mentioned, the appropriate fiscal body, they must be the ones that conduct the public hearing. That appropriate fiscal body must adopt the final budget, levy, and rate for that unit. That fiscal body now, whichever it may be, can reduce or modify the budget, but again, they cannot increase it. They cannot increase the appropriations that have already been posted or the levy that's already been posted. They can only reduce it or adopt it as it's been presented. And again, the appropriate fiscal officer of that body, that's now the person that has to submit the budgets. If you're in a situation where you're going to become one of those persons, here's an email address where you could contact our department to get the submission rights for those budgets if you need it. In some cases, that's going to be a county auditor. In other cases, it may be a deputy. Now, why don't we talk about some new legislation, if there are no questions at this point. We've got a few things that you're probably going to need to be aware of. Fortunately, there was not a lot of legislation this year that had to deal with property tax levies or budgets. They did do a lot of work, though, when it came to assessments. So we'll talk about some of those things. Starting off, we have House Enrolled Act 1472, which is now in effect as of July 1st. And this is if a county contractually assumed from another other subdivision the responsibility of operating a public safety answering point, PSAPs. The fiscal body of those parties to the contract can now petition to the DLGF to get the levy adjusted. And what we'll do if we get that petition is we'll increase the county's levy, but we'll decrease the other units because they've lost that expense, so they no longer need a property tax levy to pay for it. So we'll make those adjustments. Another one of our charges is to assure that there is no double taxation, and that would have been the situation here. Also in 1475, a county in which a public safety LOIT is not in effect as of last July 1st, they could adopt a public safety LOIT and a resolution providing that 100% of the revenue from that income tax is dedicated to the PSAP. Also, a county increasing its public safety LOIT rate after that July 1st, they could adopt a resolution that provides that 100% of that increase is dedicated to the PSAP. A couple of years ago, the statute required counties not to have more than, I believe it was 2 public safety answering points within a county. It had gotten to a point where every town in a county had their own public safety answering point. It's dispatch. You know, if you call 911, it's going to go to a certain unit. They'd be going all over the county. So those were consolidated a couple of years ago. There was a restructuring of the E911 fees that you pay on your cell phone and your landline, and all that was restructured. This was part of that. Now, something that is new that gives counties a little more flexibility now is the county council or a county income tax council, if you're a co-ed county, can now adopt an ordinance imposing that public safety income tax rate. And now you do not have to adopt one of these other LOITs. That's another local option income tax. You don't have to have that levy freeze or that property tax relief credit rate. Say that real fast. Before, you had to have one of those two or both of those in order to adopt that public safety LOIT. Well, now you can just go ahead and do the public safety LOIT. And that's a tax that you've got. A county has some latitude as to what they can do with it. The public safety LOIT is distributed only to the county and cities and towns. The county council may elect, if it's requested by a township, to share some of that revenue with the township fire department. But it's not mandatory, at least not yet. So if you've got, all counties have an income tax, but a public safety LOIT, that does give a little extra freedom in there with those dollars, because public safety is defined pretty broadly in the statute. I mean, your courts could qualify for this, your probation department, so forth. Clerks, to a degree, could qualify for some of this. Just has to be public safety related. the uses are in the statute, so you'd want to refer to it. Unfortunately, we didn't give you the citation here. If you do need that citation for those uses, send me an email, and I'll give you my email address when we get to the end, and I'll be glad to get that to you. Now, Senate Enrolled Act 436. This is where we start talking about some assessments. And this is if the acquisition cost of a taxpayer's total business personal property in a county is less than $20,000. As of the assessment date, that taxpayer, it could be exempt from taxation. The taxpayer does need to file annually for a notarized certification stating that personal property is exempt. That's a pretty low threshold, and that's a maximum of the 20,000.
Does that keep a business from wanting to grow?
I doubt it, because it's pretty small. I think anything over the 20,000 is what would be taxed.
But if I'm at 19,000, why would I want to grow?
That would be it, but that business personal property tax, I don't think is going to be a heavy burden. If that were an impairment to going into business, you probably shouldn't be going into that business. Okay, staying with House Enrolled Act 1472, county councils may adopt an ordinance imposing a local service fee on each person that files a certification statement under that for the business personal property on that acquisition cost of less than $20,000. And that fee can be up to $50 annually. And the super abatement. Some of you may have heard of a super abatement. These are pretty powerful inducements to locate into a county. And what a super abatement is before I get into this, you could basically grant a taxpayer a 20-year tax exemption. You can give them a 20-year, 100% tax abatement. That's what they call a super abatement. Up until a couple of years ago, the abatements were limited to 10 years, and a typical abatement would be 10% per year. So the first year, you'd be paying 10% on your assessment. You get to the last year, you're paying 90% of the assessment. So now they've gone to the super abatement. So the designating body, this would be an economic revitalization committee or commission. That's the designating body. They may establish the abatement schedule for selected business personal property under that super abatement schedule. And they must specify the percentage amount of the deduction for each year of the deduction and may not exceed 20 years. So you can go out to 20 years, no longer. And again, the amount of the taxes that are abated can be structured at different percentages, decreasing percentages. If a taxpayer is granted that super abatement that exceeds 10 years, the designating body must conduct a public hearing reviewing the compliance with that, so that the designating body after the 10th year is aware of what the costs are and whether that business is living up to its commitments. Generally, when these abatements are given, they've agreed to create so many jobs, so much tax base, and so forth. So they're going to go back and make sure that they've been in compliance. One of the first tax incentives in the country that had a penalty associated to it was in Indianapolis. Back when the United Airlines came here, built that big terminal out there, there were actually penalties associated with those incentives that were granted to that company if they did not comply with what they said they were going to do. And this is kind of an offshoot and a development of where that originally started. Now, business personal property exemption, I doubt if this is going to be affecting any of you, but it's Senate Enrolled Act 001. This allows counties to offer exemptions on all new business personal property. The taxpayer places in service after the ordinance is adopted or the date specified in the ordinance, and it was not previously used in Indiana before that acquisition. The County Income Tax Council must adopt the ordinance. The public hearing before the adoption applies. Copies of the ordinance come to the Department of DLG, local government finance, as well as the county auditor, and it exempts the new business personal property. I'm just going to leave this for your reference rather than reading it, because it's dealing with business personal property, and that's even a small portion of a county's operation, primarily in the assessment division, and they would be dealing with that. So if you're interested in that, I'll just let you read that on your own. This one is more relevant, I think, to anyone in local government right now. And honestly, we have no idea what kind of impact this next change is going to mean. It has to do with assessment, and it's primarily big box stores. It's Senate Enrolled Act 436. The first thing I want to mention is it's retroactive to March 1st of 2014. So this is going back to last year. So if you've got a unit in your county now that qualifies for this, they can go back for a refund of the taxes that they were charged for this year. So you may have some adjustments to your property tax settlement this year. Again, we have no idea what the impact's going to be. I made that statement before in another presentation, and someone pointed out if it's a big box retailer in our county, it's TIFed. You know, because just about all commercial property in their county is TIFed. In that case, you won't see it. You won't notice it. It's just going to affect the TIF. But if you're at someplace, let's say in a county where you've got Costco or Walmart or Myers, they can fall under this. So why don't we talk about this for a few minutes? But it's beginning with the 2014 assessment. Remember, that was last year. And future assessment dates going forward. The real property that is, it's called a limited market or special purpose property. And that's commonly called a big box retail. And they have at least 50,000 square feet. 50,000 square feet is roughly 1.5 times the size of a football field. So that tells you roughly about how big the facility is going to be. And it has to be occupied by the original owner or tenant. And any improvements with an effective age of 10 years or less, they're going to be assessed on the cost approach, minus depreciation and obsolescence. Now what that means is they're going to be assessed based on how much it costs to build that building. Now if you think about something like a Costco or a Walmart, that's a cinder block building with a concrete floor and probably a roof overhead. That's the building. The cost of putting that building up is what the assessment's going to be. And then it's going to be depreciated. This started off with Myers in Michigan. That was their first case. Myers in Indianapolis was their second test case. They won both of those. It's now spread. I've heard that even New Hampshire and New Jersey, they're getting these appeals and they're winning there also. One thing that this did was it put it to at least the cost basis. Some of those other states are getting, it's worse. I read where it was, I believe it was, it doesn't matter who it was. Their assessment that they were first charged was $14.5 million on the property. After their appeal, it went down to $1.4 million. So it was a big difference. Again, we don't know how much of an impact this is going to have in Indiana, but it's something we just have to keep an eye on. And I've got a couple of other notes about it. The land value is assessed separately. It's got a different basis altogether. If a taxpayer requests a review of the improvements with an effective age of 10 years or less, the burden of proof is on the taxpayer. They've got to provide the information on what it actually costs to build it. And remember, it's for the original tenant or the original owner. So if somebody built this thing and then somebody moved in and then moved out, went out of business, it's not going to apply. If the actual construction costs are greater than the value derived from the cost approach, I don't know if you know anything about assessment, but a cost approach is basically when you use the value that the owner is getting out of a property, that's the income. They can determine the assessment based on that income. It's their option. So in this case, they can use either the construction cost or they can use that income approach. So if they decide if the actual construction costs are greater than the value derived from the cost approach of the assessed value, it'll be the actual cost minus its depreciation and obsolescence. So again, we don't know what kind of impact it's going to be. If you're in an area that has a lot of TIF, you may not notice a lot of impact. Could be major. We just don't know. Okay, moving along, this is one that's a little easier to understand. This was Senate Enrolled Act 436. Most of you live in agricultural areas, so this may be relevant. The agricultural land-based rate for 2015 is $2,050 an acre. After this year, beginning with 2016, it's going to be that $2,050 plus the growth quotient. We've already talked about that growth quotient. That's that AVGQ. So that's how we're going to come up with the agricultural land base. In 1264, effective upon passage, this may affect your council. It's primarily for townships and some towns. Beginning with this budget cycle, so the budgets that are being reviewed right now, if a member of the fiscal body of the unit, they cannot vote on the budget or the property tax levy if they are a volunteer fireman or if they're a employee of the fire department that serves that area. So if you're in a town and one of your counselors is a fireman on your fire department, he cannot or she cannot vote for that budget or that levy. They've got to be precluded from voting. That's going to be an issue in some of these rural areas because a lot of their township boards are mostly firemen, a lot of volunteer firemen. So we'll talk about those situations here in a second. If that's a majority of the members of the unit's fiscal body, you're not going to have a majority to vote on the budget or the levies. In that case, that budget's going to be continued to the following year, meaning that budget and the levy is frozen. Again, that's if a majority of your board, of let's say a township or a town, are firemen that have to be precluded from voting on the budget. So you've lost a majority of your fiscal body, so you don't have enough people there to pass your budget. So that budget is frozen. Couple of ways to address it if that situation comes across. The executive of the unit, if you're a township, that would be your township trustee. If you're a town, it could be the mayor or the town manager. If you're the county, I would think that would be your commissioners, depending on the definition of your executive. But the executive of the unit may petition the county fiscal body for an increase in the unit's budget. Actually, that previous amount that I talked about would not apply to a county. It's only for cities, towns, and townships. The second exception, the executive of the unit could petition the county fiscal body for an additional appropriation. So that, let's say township trustee, he could, by petition, it could be a letter, it could be a request. You'd want something in writing so that it's formally done. you're going to request the county fiscal body, the county council, either for an increase in the budget or for an additional appropriation. What that's saying is that, let's suppose you go through this budget cycle, your budget's frozen, next year you need an additional appropriation, you got to go to the county council, because those firemen are still precluded from voting on the budget, even if it's an additional appropriation. Now, the executive of the unit may petition the county fiscal body for an increase in the budget. They can also petition for an increase in the property tax levy. The county fiscal body, they can grant it or deny it. They cannot modify it. So it's either a yes or a no, but they can't go in and tweak it. They can't adjust it. But they do have to have a public hearing. We'll talk about some of the requirements for that public hearing in a second. But they need to take their action before the DLGF could even review the budget. So, how are we going to put all this together? How's this thing going to work? The DLGF is going to ask each unit, each city, each town, each township to give us a letter saying who's on their board. That's a couple of thousand units. There's 1,000 townships. Maybe 1,500. I think there's about 500 to 750 cities and towns out there. So somebody's going to have some reading to do. Hope that's not me. But anyway, it's going to alert those units anyway if they've got an issue. If they find out that they've got a majority on their board that's firefighters, they're going to have to deal with it. And again, if the city, town, or a township discovers it, that's an issue, they're going to need to go ahead and petition that county council or the county executive to consider that budget, to either approve or deny the budget and the levy. And again, there's no format for this. A letter, you want to do something in writing so that you know it's there, it's before them, and I'd have them sign off on it. We're recommending that there's a public hearing. It has to be at a public hearing, and you do it before November 2nd. This is something that was not written into the law, but our charge is to have those budgets adopted and passed by your fiscal body by November 2nd. In this case, the fiscal body's out of the picture. You know, it's gone on to a higher authority. It's gone on to a county council at that point, so it's not referred to. So we're not sure exactly what the law means at that point when it's silent. So we're recommending that be adopted or approved by the county by November 2nd. When the county council does its determination, it makes its decision yay or nay, do it by passage of an ordinance or a resolution. Again, they may grant or deny. There's no modifying involved. So they can either say yes or no, and I would do that by a resolution. There needs to be a notice to the public of the hearing. You want to do this in a public hearing? Again, this was silent in the statute, but we're certain that the open door law applies. So that's going to require a 48-hour notice, minimum. 48-hour notice. Once you get the county council's determination, a copy of that is going to have to be uploaded to Gateway. It's going to have to be put into that system within 48 hours of that November 2nd deadline. In this unit, there's not going to be a Form 4. Form 4 is what the fiscal body actually signs to show that they've adopted it. They can't adopt it, so there is no Form 4. So it's going to be the Form 3, which is the notice. We always require it. In fact, you're preparing it now in Gateway. But we're also going to need that letter or that ordinance and that petition to show that it was approved by the county. And here's my contact information. I mentioned before I was going to give you my email address. It is djones@dlgf.in.gov. Here's the website for the DLGF. Again, there's tons of information out there, a lot of links to some really exciting stuff, especially if you're into taxes and tax rates. We've got contacts in there. If you want to find out your field rep, you can go to our website and contact personnel in there. My phone number is there. That's a direct line. You don't go through anyone else. It comes right to me. If you have any questions at all regarding budgets or property taxes or levies or TIF or weather, I'll try and answer anything I can. Anybody Colts fans? Oh, yes.
The one question I had, you said once we advertise the budget, the council can't increase anything?
Right.
I was thinking the old law, you had to take 2/3 of the council to increase the budget. They can't increase it at all. I thought the state law was 2/3 of the council had to approve. Say a department head or elected official made an error when he submitted the budget. At budget time, I was under the assumption that 2/3 of the county, or the council, can approve an increase. Am I wrong there?
If the budget is advertised,
Yes.
it cannot be increased.
What about the beginning of the year to increase?
At the beginning of the year, you could do an additional appropriation to increase that budget.
Takes 2/3 vote of the council, is that the way it works? To increase?
I thought it was a simple majority.
I don't know, I'm
Yeah.
not sure.
In some cases, if you need 2/3, you may not ever get it.
Correct. But I thought you could do that, you could
Yeah.
increase it at budget time, 2/3. Old law,
You,
I don't know.
it could be increased up to the point where the public has been notified. If you've advertised it, that's written in concrete, written in stone.
But the council can reduce it,
They can reduce it.
they can't increase it.
They cannot increase it. Now, that's by the fund, because the budgets are all adopted at a fund level. They can make transfers within departments or within line items, but they cannot increase that bottom line for that fund.
The fund level can't be increased, but a line item is to take the line item, 2/3 vote maybe for that line item to increase?
No, that could be done by the simple majority.
Thank you.
You're welcome. And that would be an example, let's say if you found that you've got more appropriations for your supplies than, say, you really need, and you could use it more in personal services like salaries, you could move some of that appropriation from classification supplies and increase the personal services. But it's got to be it cannot increase the bottom line for that fund. And actually, when you're at the council level, you can even move it from department to department in a county budget, but you just cannot increase the total for the fund.
Would that have been a salary increase, be 2/3 vote, or something? I remember a 2/3 vote by the council, would that have been a salary increase for an employee? I don't know, if it's something,
The salaries are determined by your salary ordinance.
but increase that, say there's an oversight, and I can't recall what the council had, the state statute required 2/3 of the council vote, I forget what that was in regard to.
Yeah, I'd have to, I honestly don't recall.
Thank you.
If you'd like to email that to me, I'll be glad to look into it, because I'm certain it's in there. In some cases, it's to override a veto of a mayor, but that would only be for a city or a town budget. Because there are thresholds there that you have to pass to override a veto, and it's not a simple majority.